Hi, welcome. My name is Jer, and I am a chartered accountant from Fuchsia Bell Chartered Accountants. And today I want to talk to you about cash flow management within your business. If you are a business owner, you will know that it is rewarding while also overwhelming running a business, and that on a daily basis we struggle running the finance, looking after employees, and trying to increase the customer base. So I've created this webinar in order to show you how you can work smarter and not harder to achieve the profitability that you crave within your business. And this is why I created the profitability growth model, was to show business owners how to unlock the profit within their business. And I'm just going to show you quickly what the profitability growth model looks like for those of you who haven't seen it. So here it is, a quick snapshot of the profitable growth model. And we're going to concentrate on one section today. So I'm going to start by listing some of the things that business owners crave most. So, profitability. We all know that we want profit within our business. Customer satisfaction. In order to get to that profit, we need customers to be satisfied with what we're offering. Growth and expansion. Who doesn't want to grow their business and increase their profit? Financial stability. That is the end goal, isn't it? So that we be financially stable. And work-life balance. Of course, running a business, we need to have work-life balance. It can't be all about the business 12 hours a day. So here we are, back to the profitability growth model. And we're going to look at the cash flow subsection of the profitability growth model, which is under money management. So let's look at some of the challenges in relation to cash flow that businesses face. So some of the challenges are tax payments. Tax payments occur throughout the year, whether it be VAT, PAYE, corporation tax. Wage payments, these are non-negotiable. We have to pay wages, or else, of course, there's employment law. Spiraling expenses. Lately we've seen an increase in light and heat. I've seen a lot of increase in commercial rates for a number of businesses. Changing customer habits. Customers always, change. They frequently move from competitor to competitor. Increased competition. We need to keep up to date with the increased competition if we are to remain competitive within our industry. Now, let's look at some of the problems because of these challenges. And some of the problems are, of course, problems of the revenue will lead to interest and penalties and can lead to you being put on their blacklist, which we have to avoid. Late payments to employees. Of course, that's self-explanatory. We've unsatisfied employees. Again, employment law. Unsustainable expenses. Inability to meet customer orders. Again, customers will go somewhere else. They have the flexibility. And of course, with they can search for customers easily now than they could ever do in the past, and unable to keep up with competition. Some of the common mistakes that business owners make in relation to cash flow and not cash flow forecasting. So if you fail to forecast your cash, it's hard to anticipate any periods of low cash. A confusing profit with cash flow. This is a big one. Just because you've made profit of 25K last year doesn't mean that you have 25K inside in the bank. Lack of cash reserves. Businesses often overlook the importance of having a buffer cash available. Extending credit too freely. Extending credit too freely means that you do not have the cash flow coming in when it should come in to meet those ongoing expenses. Overstating sales projections. Over optimistic about sales. Underestimating expenses. Not monitoring accounts receivable. So, you're allowing your debtors or your customers, have more than 30, 60, maybe 90 days in some cases. And with some businesses I've worked with, some customers haven't paid for a whole year, that this is problematic. And over investing in fixed assets is another big one, and not planning for seasonality. So every business that I deal with has, part of the year where the revenue is higher than other parts of the year, and that needs to be planned for. Now we're going to look at some of The solutions. So some of the solutions are obviously create a cash flow. Regular projections forecast your cash flow monthly, quarterly, and annually, and it helps anticipate periods of surplus or shortfall. Implement strong invoicing and collection. So remember the customer I was talking about that had, an outstanding customer balance due for over a year. So what we need to have is prompt invoicing. So invoices need to be sent immediately to the customer. We need to have clear payment instructions. I'm just going to move on here to the next. Sorry, now clear payment instructions, and we need to have we need to monitor and control expenses. So expense tracking regularly is a must to identify, unnecessary expenses, or at times when expenses are going to be higher in parts of the year than other parts of the year. And of course, building the cash reserves. That's a big one. We've mentioned already, so that we can take the shortfall. And debt repayment strategy. So the business may have debt, and sometimes, the period may be short. So we might be able to extend that period, to, I suppose, make the payments less every month for the business. So let's look at a case study. This is a business I worked with, and I've changed the name obviously for confidential reasons. And I'm showing you this case study because by implementing the strategies, the business gained a better control over the cash flow and reduced financial stress, and we're in a better position for their long-term success. So let's look at some of the background to the business. XY Farms was a medium-sized business in the horticultural industry, and it was growing and selling plants, herbs, and it was located on the outskirts of Limerick City. The business was serving retail and customers and local landscaping customers. Despite having a solid customer base, and producing high quality products, it faced challenges in relation to cash flow. Okay, so the seasonal nature meant that XY Farms often experienced periods of cash shortfalls. Okay, so we want to look at some of the problems that this business faced. So I just want to move down here a bit to this next slide. Apologies there. We just jump onto this one. And some of the problems it faced was it had high upfront costs for the fertilizers it used. So it was paying, huge amounts for fertilizers all, upfront, but buying in bulk. And there were delays in payment from the landscaping clients. Of course, they were offering credit days of 60 days and over. So that meant they had to wait 60 days for, to receive the monies for the plants and the shrubs and the vegetables that they were selling. And seasonal fluctuations with peak income during the spring and early summer caused major issues for this business. So the issues resulted in cash shortages throughout the year. So we looked at a solution, and the solutions were implementing a cash flow, a no-brainer. So XY started using cash flow forecasting to predict periods of surplus and shortfall, and analyzed the past sales trends and seasonal patterns so that the client payment histories and the farm created a monthly cash flow based on this. Okay, so it had a good understanding, for the 12 months ahead, what months would be low in cash and what months would be a surplus to cash. And it introduced a subscription model. So it started to sell vegetables online. Okay, so it was receiving orders online, but it also started a program where if you paid X amount every month by direct debit, you got your vegetables delivered to your door. Okay, so this was also an extra revenue stream, and also extra revenue. So it started offering, an incentive for customers to pay early. So it started introducing, if you paid within 30 days, you would get a 2% decrease in your invoice. This worked very well. And I know there was a cost to it of 2% of the value of the sale invoice. But, working with the 2%, it was well worth, absorbing that cost in order to receive the monies within 30 days. Of course, the inventory management, that goes without saying. And of course, the diversifying income streams, it expanded by, offering different types of plant. Also, courses in how to plant and courses how to grow vegetables was very popular for the business. And negotiating with the suppliers. Okay, this is always a big one. Okay, don't just go with what the supplier is giving you as a price. Always try and negotiate with suppliers to get a better price. Because supplier, you are a customer of the supplier, and it's always well worth sitting down with them and going through some of the prices or improvement on prices, and securing a line of credit. Now, this is important, and especially when it comes to an overdraft can be costly, but it's valuable, when it comes to the months where, especially when this business was suffering from, you know, a deficit in cash, that it was able to, overdraw on its bank account, in order to meet, those months, the expenses in those months. So, what was the result of all of this? Within 12 months of implementing the cash flow management strategies, XY farms experienced the following improvements. Okay, so steady cash flow. So the monthly cash flow became more predictable and stable during the off-peak season. So the subscription model accounted for a total of 20% of its revenue. So there was a great, and there was great interest and uptake on this subscription model of delivering vegetables every month. So that was that was a good positive, and reduced payment delays. So the introduction of the early payment discounts led to a 30% decrease in the average payment time. Now, this was huge for Cashflow, absolutely brilliant. And the optimized inventory, of course, they started this the recycling the waste from some of the products that were, that had uh, gone off, I suppose, is the best way to describe it. And they started to recycle this, and this also became very positive for the business. Increased profit margin, of course, what we started off with, one of the key one of the key reasons that people operate is to see, profit within their business. So the diversification of products and services boosted the profit margins. Of course, that was a huge positive. Now, of course, leading to this, by implementing the cash flow management techniques, XY Farms improved its financial health, ensuring consistent cash flow even during challenging times. And the combination of forecasting, flexible payment terms, diversified income, allowed the business to thrive, providing a sustainable model for horticulture business facing similar challenges. Okay, so very positive effect with this business, Um, so, do you need help or do you want help? If you do, please DM me, PGM, which is a short for profitability growth model, and I will send you on a summary of the profitability growth model. And thank you for listening, and thank you for joining this webinar.